the PPC leads, because I do that too, those things cost me, I'm bidding, right? My money's going up. I got to bid a dollar amount that I bid every day. And when I use it, it's over. And like, hey, wait a minute. If I'm going to spend $5 in a commercial on the low end, 50 on the high end, right? Depending, I got commercials from 5, 15 and 35 and 50. I'm like, this makes sense, right? And not only that, but I get the credibility in the community. Like, hey, these guys are the real deal. They're gonna, if they're on TV, they must be doing something right.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Martin Perdomo is the host of Latinos in Real Estate Investing podcast. Martin aims to educate people and get them started on their journey to financial freedom through real estate investing. Martin, welcome to the show.
Sam, thank you for having me, brother. It's a pleasure and an honor to be able to share with your audience.
Awesome, Martin. Glad to have you on today. There are 3 questions I ask every guest who comes on the show. In 90 seconds or less, can you tell me, where did you start? Where are you now? And how did you get there?
Started investing in real estate in 2007, bought my first property. I was a mortgage broker, so I had FOMO, fear of missing out. Everyone was buying real estate, and I was giving money away basically back in those days, 05, 06, and 7. And I bought my first investment property, paid $275 for it, knew nothing about real estate investing, only did it because I knew that was a way to financial freedom. You hear it, you know it intuitively, but there's more to it than that, as you know. Bought it 2 years later, $100,000 underwater. Same property was worth $179,000. And 14 years later, had an appraisal come here last month. I bought a property not too far from it. He was using a comp property, same property, 2 doors down, exact same property. Sold for $385,000. So don't wait to buy real estate. Buy real estate and wait.
What did you do with that house?
Good question. I bought it because it was close to the university, by ESU University, and I rented it to college students. And what college students typically do is they rent it around May, and they go to May, right, when school starts. And around April, they start winding down. These kids didn't pay their light bill. So one kid was studying with a candle in the room, and the curtain caught on fire, mattress caught on fire. They burned my house down. So I like to think that I kind of attracted that because I was so, like, my energy energetically, felt like so stuck with that property because I didn't know what I was doing, that it was like the universe, God, was the way of getting me out of it.
What year did it burn to the ground?
I burned to the ground in 2012.
Okay, so you held it through the recession.
Yeah, I held it,
which is the right move.
Yeah, there was no other move. I was broken. I didn't know what to do, brother. I didn't have the education I have today. But in hindsight, it was if I would have held on, I still would have won.
You still would have won. And I think that's the thing, that the lesson that so many people probably didn't employ. For those that were unable to hold on, that's a different story. But everybody panics when they see that the comp value of their property goes down.
Mm-hmm.
How has your thinking shifted now when you evaluate and look at properties in light of that experience?
That's a great question. I just bought a quad up the street from here, and I was just in a meeting with my business coach this morning, and he asked me a similar question because we're looking at, hey, the stuff we're flipping, and the difference in my mindset and what I look at now is I look at the long view. I focus on 10 years, 15 years. I look at the long view of things. I don't just focus that interest rates are going up. Hey, this happens. Interest rates go up. I don't concern. Prices are going down. Hey, this happens. Prices went down. There's always a panic in the market, Sam, no matter what. Last year's panic, what was it? Oh, this is a bubble. People paying 20, 40,000 over asking. 22, 21, right? 21 and 20, that was it. In 18, in 19 and 18, before COVID, what was it? Well, any moment a recession is going to happen. We're due. We're the longest bull market in history, and we're due. So the media, there's something about human beings. We're always looking for what's next around the corner that can come kill us. But if we can just, when it comes to real estate, I like to think of it as long term. And when I think of it as long term, all the noise goes away.
Right.
For me, all of the noise goes away.
Right. That's exactly it. That's exactly it. Yeah. Somebody, and this is kind of in line with that, but somebody asked me this yesterday. It was like talking about a couple pieces of real estate we own. I said, look, I'm going to hold those forever.
Mm,
It's long term. I'm going to hold them until I no longer want to own them. Like we buy
yep,
stuff today that produces an income, and I want to hold it till I don't want to anymore. And I really
yeah,
don't care what the value of it is on paper. As long as it continues to produce revenue, I'm happy, man. So
yep.
that's really cool. You mentioned a quad, you mentioned a single family residence. How many aspects of real estate are you involved in at the moment?
So we buy apartment buildings, right? So we buy apartment buildings. We currently own 108. It goes up and down because we flip and we
Sure.
also flip. So we currently own 108 doors. So we own a bunch of assets. Our biggest asset is 40 units
Hmm.
and 17 right next to each other. So we do a multifaceted of things. We currently have a television commercial locally where we're marketing to motivated sellers. We're just kind of lining ourselves and getting ourselves ready for if there is, and I use that word intentionally, if there is a correction, a real correction, because it's just so different. We have people with interest rates of 2 and 3% that, yeah, they might have overpaid last year, but where are they going? Right? There's an affordability issue. Where are they going? They can come rent from us, from you, and from me for what they're paying for the less. They're paying less for mortgage. So I don't know. There's a lot of hype about the market this, the market that. Either way, I always plan for worst case scenario. I'm planning if when the fear starts, because the fear mongering has already begun. Mainstream media is already putting the fear. And human beings, especially people that aren't like you and I in this business educated, they're gonna panic and they're gonna get scared.
Right.
So we flip, we buy fix and flip properties. I enjoy that. That is fun for me. And we also buy and hold long term. We're in the middle of buying a hotel right now. We're looking to acquire a hotel right now. So I'm really excited about the future. Future's bright, Sam. Future's bright, brother. That's all I can tell you, man. The future is bright. I'm excited about the future.
I love that attitude. Somebody asked me that a couple weeks ago. They said, hey, when's the right, is now a good time to get into real estate? I'm like,
Every time.
yes. Yes, absolutely it is. Like now is a great time to get in. Tell me about your hotel. I mean, we've talked about multifamily, you've talked about single family residences, you've talked about flipping.
Yeah.
Tell me about your hotel, and then I got some other follow-up questions, but we'll start on
Yeah.
this.
Yeah, so we, I as a kid, right? I remember I'll share the story with you. My wife and we've been married 20 years. We've been together 25, 26 years now.
Cool.
And we were teenagers, we were kids, right? When we first started dating. And one day I used to work in the body shop in New York City in Harlem. I don't know if you're familiar with Harlem, commonplace in New York City. And it was really rough, man. Really, really rough place. It was burned down buildings, cracked buildings, low place in the late 80s, 90s.
Right.
And it was 1997 one day, and I used to work in this place called the Body Shop on 125th and 5th Avenue. My wife comes to pick me up, my girlfriend at the time, and I look across the street and I see this building, this burnt down building in 125th and 5th. And I say, you see that building across the street, hon? I said, if I could buy that building, fix it, rent it, and renovate it and rent it, we can be rich. I mean, I'm 17 years old, right? And she's like, no way. She's looking at the area and she's saying, no way. But my wife and I have always romanticized with owning bigger assets, with owning big assets. And we've always talked about owning a hotel. Like that's a play. So I'm at a place in my career where it's about the game. This is fun for me. And it's like Monopoly. So you buy houses, and then boom, you put the hotel. So one of my long-term goals has always been to own hotels. And we've looked at a couple. I think we're about to go on the contract with one. It's 38 keys because that's the language in hotels. So it's 38 doors, equivalent to 38 doors.
Right.
So it's 38 keys, a small hotel here in the Poconos, but the location's amazing. The location's across the street from from Mount Airy Casino here in the Poconos. And it's close to the ski resorts. I mean, it's like the strategy. We did the numbers, and we're talking about 173% return on investment to our investors when we raise that capital. I mean, it's an amazing deal where we don't have it on the contract yet, but by the time this podcast comes out, it should be on the contract.
Man, that's awesome. I love that. I love that. What are you doing with it? Are you going to turn it into, I mean, a lot of, not a lot of, but many guests who come on the show that are buying hotels are doing like the Airbnb model, getting rid of the front desk. They're making it keyless. They're going to,
Yeah, so we're toying around with that idea because we're in the Poconos. So Poconos is a very resorty
Right.
vacation area, so it's perfect. It's across the street from the casino. I mean, we're toying around with that idea. You know, we have an affordable housing crisis across the whole country. There's no different here.
Right.
We're thinking about creating some extended stay. We're toying around with that idea, but that's the primary right now. What we're thinking is creating it into an experience type of hotel. And what I mean by that is partnering up with a bus company that'll bus people into, hey, the ski resort, bring you back to the hotel, take you to the casino, take you to the indoor water park that we have here. We're going to take, like, just kind of making it that hub, but not the price of Camelback where they have the indoor water park and all that stuff, right?
Right.
But that's kind of what we're envisioning right now as we're in the beginning stages of that particular deal.
That's really cool. Let's talk about how you are finding opportunities. I mean, there's each of these channels has their own unique acquisition strategy, you know.
Yes, sir.
So how are you having such diverse asset or such diversified assets that you're investing in and then finding opportunity in a meaningful way?
Yeah, so that's a really great question. I do multiple things. So first thing is we have our own marketing channel. All our properties, we buy them off market. Everything's off market. We do it through mailers. We don't do a lot of mailers, but yeah, we do. We have a television commercial, just gives us local branding recognition, and we get a lot of calls from there. We also do a lot. I'm actually hosting tonight my every other month meetup. So I host a meetup and I fill the room with investors and I just educate and empower and help, just give. I like to give. This is why I do things like this. I like to give and help others come up. And through that means, it just kind of gives us that credibility and they know we're real buyers because there's a lot of pretenders out there. As you know, Sam, there's a lot of guys, oh, I'm a buyer. And we also have a broker channel. We have relationships just through the years that I've built through all the stuff that I do, the meetups, the advertising, I'm very involved. This is what I do. I do this every day, all day, every day, 24/7 a week, brother. This is all I do is real estate. So it's just we've got multiple angles and multiple things that we work on. Property managers bring us deals, brokers bring us deals, wholesalers bring us deals. We have our own marketing that bring us deals. So we are just constantly letting people know we're buying. And if you're doing something, you got to let the world know that you're doing it. Right. You're doing something. Hey, this is what I'm doing. You're raising money. Hey, I'm looking to get some money to help people get above average return on their investments. Right. Like you got to let people know what you're doing. You got to take action. Right.
Love that.
You got to take action. I like the old saying of ready, fire, aim. Right. Instead of right. Just ready, action, and then readjust and aim again and adjust accordingly.
That's awesome. Tell me about the TV commercial. That's not a channel. Nope. I guess there is a pun there. That's terrible. I'm sorry I even said that. That is not a medium. Yeah, that many people are utilizing today. How do you calculate return on investment on that?
That's an amazing question, and before we did it, we toyed around with that. And the thing is, that really gets us deals for our single family distress owners, right? And it's very strategic. We're very strategic in where we advertise, what TV channels we advertise on, and who is it that's watching what we're selling, right? And we advertise on like the Jerry Springers of the world shows, right? The core TV daytime shows, right? Well, who's watching those, right? The people that are distressed, going through a divorce, people that are losing, that don't have a job, and we advertise late at night, right? Third shift people. So we're very specific on the demographics and who we're getting in front of. Maybe grandma, grandpa that's got that old house that's falling apart, or it's got that old, 10-unit apartment building that they no longer can handle, right? And here's this guy on TV saying, hey, we'll buy it 21 days or less, or we'll give you an extra $5,000, regardless of the condition.
Right. And that's the demographic. I guess that was going to be my follow-up question is who's the demographic, who you're shooting for. And
yeah, that's the demographics for that's who's watching that, right? It's not, guys like you and I are not watching Judge Judy. Let's be real, right? Like we're not we're not judging, we're not watching Jerry Springer, right? We're working, we're hustling, we're running, and we're leading our teams, and we're doing we're doing things differently.
Yeah, no, we are not watching either of those daytime TV shows. I wish it'd be nice to have that amount of free time to go,
Yeah,
but I wouldn't spend it doing that if I did have the free time. So regardless, I'm
right.
still not watching it. What about cost on that? I know that there is no cost when advertising works, right? It's like it is a return on investment is what you're really looking for. But I am really curious, like when you look at that and before you launched into it, I mean, was it a tough pill to swallow to say, man, we got to shell out X number of dollars for a TV commercial?
It was not because I just believe in investing in my business. It's just like, hey, I'm gonna invest in my business no matter what. And I processed it when I looked at it. I said, this makes sense, and this is a model that's working for the other investors across the country. And I said, you know what, this makes sense. And then when I looked at the numbers, it made even more sense. I got one of my invoices, and I'm looking at last week I got one of my invoices, and I'm looking at the invoice, like gives me the time and what channel it plays and what I'm paying for that slot, 30-second slot. I mean, I am blessed, brother, because of where I'm located. I'm not in Philadelphia or the New York City market, right? I'm kind of in between. And so the slots that I'm paying $15 for a 30-second commercial. Dude, I know. There's some late night ones I'm paying $5. Some I'm paying 35, and other slots I'm paying 50, depending on the show and the slots. So I'm looking at it and I'm saying, hey man, what does it cost me to pay per click, right? What does it cost me on the PPC leads, right? Those are the PPC leads, because I do that too. Those things cost me, I'm bidding, right? My money's going up. I got to bid a dollar amount that I bid every day. And when I use it, it's over. And like, hey, wait a minute. If I'm going to spend $5 in a commercial on the low end, 50 on the high end, right? Depending, I got commercials from 5, 15, and 35 and 50. I'm like, this makes sense, right? And not only that, but I get the credibility in the community. Like, hey, these guys are the real deal. They're gonna, if they're on TV, they must be doing something right.
Right.
And this is psychology of what people think. And when my sales guys show up, their life is so much easier, right? Because, hey, we got you from the TV. They're not competing with wholesalers. It's like my guys show up, and if there's a deal to be done, we're going to do the deal, right? So the cost is not cost prohibitive. However, I did wanted to go into other markets closer to the Philly market, Lehigh Valley area, which is, closer to the Philly market. And now it starts getting like, well, really expensive, right, per spot, $350 per spot. And again, I'm just, in the right location for what we're doing. Right.
But again, I mean, if let's say that ad ran 15 times at $400 a slot, that's let's call it $6,000. You went out the door and you closed one good deal out of it.
Yeah. So I did the numbers for us. I could tell you, I don't mind sharing this. I mean, the numbers, because of my market, my demographics, right? Because of my demographics, the numbers wind up being somewhere close to $6,000 a month. After it's all said and done, I'm probably in 95,000 a year. But I mean, if I do a couple flips, and like we already got it, we make usually our return on our investment in the first quarter for the year. So it's like, hey man, we and we know what we're doing, right? Like we know how to run the numbers, we know the market, we understand interest rates are going up. So we know if we're buying a property to flip, we're not going to in this economy, we're not buying anything that ARV is over 300. We want to stay low for affordability because we're always going to move that product. And then, we're always picking up stuff. We're always adding to our portfolio. So we pick up through that commercial, a 10 unit, a 15 unit, because a grandma will watch us, or the grandson is going to watch us with grandma and say, hey, mom or grandma, we got to call that guy because that apartment building you have is falling apart. We need to sell it.
Right. It's brilliant.
Right.
I love it. The other thing I love about that is that it separates you from everyone else. Yeah. And I always said that with pay-per-click, back when I was doing single family stuff, it was like, I can outspend most of my wholesale competition And while you might say on the front end that doesn't make any sense, well, like you said, you're paying for that in the first quarter. I remember my pay-per-click budget in what was that? What year was last year? I did single family was 2018, and in the first 30 days, I'd already paid for my year's budgeting with pay-per-click. And it was like,
Yeah.
I can outspend you, and that puts me in front and puts me at the front of the pack over everybody else because I can do that. So that's and it's a different medium. This is a very different medium as well. So you're separating yourself both by medium type and by the amount of money you can devote to actually advertising on that front. So that's really, really cool. Martin, before we sign off here, I do want to hear about your podcast, why you started it, and just give me a little bit of insight on that.
Yeah. So for me, I'm a big personal development guy. I'm a big mindset guy. I believe that success is 80% mindset and 20% skill set, and that combined is 100% success. And for me, coming up, I realized that once I shifted my mindset, right, from a scarcity mindset to an abundance mindset, and that's loaded. That's a loaded statement. But once I shifted my mindset from one to the other, my life changed. And that's when I really started celebrating my growth, and I really started making bigger and power moves. And the purpose of my life is to empower others to be the best version of themselves. Right. So while I love real estate, I love the game, I love what I do, I really do. And I also host a podcast because I want to help other people come up. I really want to wholeheartedly, like, hey, man, you can do this too. If a poor guy like me from the ghetto and the hood in Washington Heights in New York City can come from nothing and do this, so can anyone else. And if you're really determined and you want to work and you work on yourself and you work on your mindset and you work on your skill set, you can do it, right? And everything about, I don't have enough money, it's a limiting belief. Who says you need your money, right? That's all limiting beliefs. It's just go get educated. Listen to podcasts like this. Listen to Sam. Listen to podcasts like mine. Go and listen to other smart people that are doing it. Gather the information, take action, and then adjust, right? Ready, fire, aim, right? Take action, adjust. So it's because I just love to empower and help others. I'm hosting my meetup tonight. That thing takes 5 hours out of my day, 5-6 hours. I got to go set up at the church because I hosted at the church. I go set up, prepare the content, write all this stuff. And it's like, man, it takes a lot of work to do. But it's more fulfilling to me when I see that guy that does his first deal and they're like, Martin, thank you because you shared that and you showed me this and you showed me that. Like, man, that fills me.
Right. That's really
right. It's all worth it when like I see others like helping others and others are coming up.
Martin, I absolutely love it. If our listeners want to get in touch with you or learn more about you, what is the best way to do that?
Yeah, they could just go to Latinos and Real Estate Investing Podcast, check out my podcast, or check out my YouTube. I'm constantly putting out daily vlogs, not daily vlogs, but I put vlogs out on my projects and what's going on. I literally just walked from one of my projects up the road here. My roofers are putting on the roof on that property I just bought. So I'm constantly putting up content, giving people the real deal. On my channel, YouTube channel, I give people the real deal. I tell you the truth about evictions and what really happens, and I give it to you all straight. Construction workers, what really happens with them if you're not doing it the right way, they will kill you. They will hurt your business. If you know, Sam. Right. So they can check out my YouTube, the Elite Strategist, or my podcast, Latinos and Real Estate Investing Podcast, or Instagram. I'm on Instagram and Facebook, the Elite Strategist. They can look me up there too.
Awesome. Martin, thank you so much for coming on the show today. I certainly appreciate it.
Thank you, brother. Appreciate you.